Hello and welcome to RockX's webinar, Maximizing Opportunities with the Shapella Upgrade. Thank you all for tuning in. We'll be starting shortly, just doing a final test of everything now. Won't be long. Alrighty. Okay, let us start. Thank you everybody for joining. This is exciting times. We are 1 week away from the Ethereum Shapella upgrade. And for those of you that don't know about that, it's probably one of the biggest things that is happening in the Ethereum network right now. I would like to first thank all of you for joining and thank our speakers and the panelists. We have some very, very exciting panelists today coming from all different areas. We've got sales, we've got developers, we've got founders. It's going to be a great session. Before we do kick off and I introduce the speakers, I would like to just run through some housekeeping rules very briefly. So to start with, the chat is open for you all. Please feel free to converse with each other and ask questions, but please do keep it free of price speculation as much as you can. I know that is a very exciting topic for people to talk about. Please be respectful of everybody. No offensive comments or inappropriate talk will be tolerated. You can ask your questions at any point in time in the chat. So as our panelists are discussing, please feel free to ask questions as they come up. The questions will be answered near the end of the session, however, at the Q&A section. So we will be collecting them throughout and answering. We will answer as many as we can, depending on time. We might not get to them all, but we'll do our very best on that. And in case you would like to rewatch or you have friends or colleagues who can't attend, we are recording this session and it will be uploaded to our YouTube channel shortly after. So without further delay, let me introduce our guests and panelists. We have Kelvin Xu from Impossible Finance. Kelvin is one of the core builders at Impossible Finance, and Impossible Finance is a multi-chain accelerator and launchpad. And before working there, he was previously part of the research team and diligence team for Binance Launchpad, and he built up the Binance staking product to support over 30 different blockchains. Thank you for joining us, Kelvin. We also have Junde, or JD, Head of Global Sales at Cobo. Now, Junde takes care of the global revenue teams at Cobo, and he works with crypto native as well as traditional finance and Web2 companies to help power their crypto businesses with custody technology. Prior to working at Cobo, he held executive roles in Web2 companies in the AI and big data and mobile app space. And most recently, he was also the GM of global gaming at App Annie. Outside of Cobo, JD is an investor at True Global Ventures and also runs a Telegram group for crypto golfers in Singapore. Any golfers, make sure you hit him up to get involved in that group if you're in Singapore. And finally, we have Zhuling, CEO and founder of RockX. Zhuling is one of my personal friends, and I've known him for almost 6 years now, working with him on a couple of different projects. RockX is one of Asia's leading staking platforms, holding over $900 million in assets currently staked. And RockX also provides access nodes, which enables developers and institutions to interact with major proof-of-stake networks. Before founding RockX, Zhuling also founded ALF, a multi-layer parallel computing distributed network. Now Zhuling is focused on pursuing his vision of safeguarding Web3 and making it accessible to all. I'm very excited, I can't tell you. We have some very good experience between the three panelists here today. Now, the focus of today's webinar is going to be discussing about the Shapella upgrade on Ethereum and what that means for institutional investors and how that's going to impact us all. let me just give a very brief introduction as to the Shapella upgrade for those that aren't quite familiar or haven't been following with it. Previously, it was known as the Shanghai upgrade, which it was then combined with the Capella upgrade to be renamed the Shapella upgrade. Now, the Shanghai upgrade is on the execution layer of Ethereum, and the Capella upgrade is on the consensus layer. Now, there are a number of upgrades and technology advantages that are going to be happening during this upgrade, but the one that is on everybody's mind is the enabling of withdrawals. So staking has been available on Ethereum for almost 2 years now, but anybody who's staked will know that you are unable to withdraw any of that ETH at any point in time. However, that is all going to change hopefully next week with the smooth upgrade for Shapella, where that will go live. There are a lot of mechanics and technical components around this. It's not as simple as just everything is going to be able to be withdrawn. And so do dive into some of the articles that are describing that after this webinar if you still have questions. But I think that gives a very, very brief summary of what the Shapella upgrade is about. So to start off with, I would like to ask each of our panelists, what can we expect to happen on the day of the upgrade, which is happening, it's estimated to be occurring on April 12th, so 7 days from now. Kelvin, would you like to start?
Yeah, so I think in general, I think sometimes crypto has this phrase of buy the rumor, sell the news. So I know we won't venture too much into price talk, but I think it's something that is an interesting kind of behavior that I think a lot of crypto network participants, I think they always want to feel like they're ahead of the news. For me, I kind of think that a lot of this will be a non-event in terms of whether or not short-term or long-term any price things or not price things. Hopefully it's just any other normal upgrade that we see from the Ethereum network. But one thing that I do think is really important is to allow for people to feel comfortable in institutional size, bring liquidity and assets into staking worlds. They do need to know that there is a process to unstake. We've seen, of course, many institutionals, let's say, for example, go after some supposedly hedged trades with things like grayscale BTC or other types of instruments that are supposed to track the value of something, but then perhaps the time scale or horizon of any of these spreads closing may not actually happen in a rational time window. And those are caused by the fact that some other instruments out there in crypto, or I would say institutional crypto, may not necessarily be fully arbitrageable. And so part of what I think is really important is with this upgrade going smoothly, that then people can feel comfortable in hopefully staking even more ETH and using even more the tools at their disposal to make the best financial decisions for themselves. I personally don't think that much of the institutional world has really grasped ETH just yet as a perhaps safe haven. And I think that, we always talk about an ETH flipping Bitcoin or something like this. I think that one of the key factors that needs to happen in order for more people to feel comfortable is for this upgrade to go through. So for me, I'm actually much more excited about the long-term perspectives that we can hopefully have, more institutions feel comfortable in knowing that there is a path to unstake, then hopefully they will be more attracted to stake in the first place.
That's definitely a hot topic, isn't it? Whether the impact will be on everybody unstaking or whether it will encourage these institutions that have been a little bit tentative to really dive into that form of investment really in Web3. Zhuling, did you have anything to add to that?
Yeah, I mean, Kelvin has made some really, really good points, which resonates with me really a lot. Especially the point that about grayscale, or sometimes people think that when they do the pricing, right, they always assume that it's a two-way or redeemable, but it may not turn out that way. So there's always a tenure mismatch. That happens to Grayscale, that happens to even in the real world, right? Silicon Valley Bank holding all the T-bills. So that was a big issue and a big surprise to everyone. Just to add on to Kelvin's point, I think first of all, I do expect it's going to be a very peaceful day for the upgrade, because from a technology perspective, this is much easier than the merge last year, where they have to bring two chains connect to each other. This time is actually built upon that foundation. This is just to enable a new feature. So yeah, I mean, and also, the way how Ethereum has done things right now is that they always complete a few test rounds on testnets. So that has been done on Shapella, has been done on also Goerli. Yeah, so I don't see that. I don't see any alerting factors here. I also believe that custodies and also other companies are also very skillful in terms of managing such a hard fork. So all the stakeholders in the ecosystem are well prepared for that. And the last point here is that with a proper withdrawal happened, this is going to give a lot of confidence to everyone. Yeah, because this is actually all the promises being delivered. Ethereum in the past few years were kind of known for keep delaying things. But since last year, we start to see things that get checked, right? And personally, I also think this is the best opportunity. This is actually the beginning of institutional adoption for Ethereum, given that right now there's gonna be a long-term market risk-free yield curve for everyone holding ETH, and also this is the first time that ETH holders will find yield opportunity and also can participate in the validation of the whole network. Yeah, so the engagement and the utility of ETH itself is going to get more people into this space. So I'm super excited about that.
Absolutely. I mean, both of you are really kind of covering it really, really well. JD, I'm not sure if you've got much to add there, but did you have any points you'd like to share as well?
I guess not so much. I think basically we all agree that it won't be a very eventful day. I think we will see more benefits as we go, 2-3 weeks later, a few months later. Yeah.
I think Zhuling, you made a really good point in that this is such a small upgrade compared to the merge, technically speaking, and people seem to be kind of blowing that out of proportion with all that news and the rumors and the debates about withdrawals and these smaller things, which for the majority of users, they're not even going to notice it. I mean, if it wasn't so prevalent in the news, a lot of people probably wouldn't even realize this upgrade was happening on April 12th when it does occur. So maybe in the same order, going a little bit more direct, for each of your companies, how have you been preparing for the upgrade?
Yeah, I guess for us, we've been just still excited about how I think this has drawn a lot of attention to generally liquid staking derivatives as a whole. Obviously, I think RockX is, I'll speak because maybe Zhuling will feel a little bit too partial or biased here, but I think it's really powerful when we are able to dumb things down to the regular user. And I think still there's a lot of components, whether it's financial barriers of who can really run a validator themselves, or who knows how to run a validator, so on and so forth. There's just a lot of barriers that if we truly want a decentralized network, I think that it will take a long time for us to get there if we don't have some of these types of infrastructures in place. And I think that this whole kind of conversation around Shanghai, Capella, so on and so forth, it's been really great to see that more and more people do want to care about participating in the kind of future of Ethereum. And so for ourselves at Impossible, one of the things that we have a phrase of trying to be dangerously early in a lot of sectors. I think this is also our, I guess, juxtaposition to folks like Cobo. I think you guys were super early in allowing for yield products to be inside a very retail-facing user experience, but you've also built things like Gnosis safe mini apps and things like this for a lot more institutional institutional usage of DeFi protocols in a safe manner. I think this type of stuff is actually really important for the space. And for us at Impossible, we have to be aggressive in trying to see these types of infrastructures be built in order for our own portfolio, the projects that we've incubated, to have all of these opportunities at their fingertips, and to be able to hopefully integrate with these as well. So I'm pretty excited, to be quite honest, in terms of how many different infrastructure plays I think can get some spotlight over the course of the remainder of the year. And so a lot of the project teams that we've been incubating for quite a while now, I think finally have a chance to be understood by the community. I think maybe 2 years ago is maybe too early for a lot of regular users to hear about things like, oh, this thing can help you, allow you to run a node by yourself, or whatever it might be, right? But I think as we do just more education over time as a sector, that we're actually preparing more of our users to be active participants in ecosystems rather than purely speculators. If you asked people like what can they do on ETH, 5 years ago, right? It's just maybe participating in ICOs and throwing money at an ERC20 at a contract address. That's like the most you're gonna ever do on chain, right? I think we've gone quite a far ways away, but I think there's still room for us to continue growing as a space in that regard. And so for us as a kind of venture builder, wanting to see these early stage projects grow, it also validates a lot of the teams that have been building infrastructure behind the scenes rather than just chasing trends of whatever is the hot kind of, maybe metaverse or whatever your favorite word is from the last few years. That I think this is maybe a time to shine for some of the quiet builders that have been creating this infrastructure.
Yeah, definitely the quiet builders. I like that phrase, and it's those guys that you really see some powerful developments and cutting edge technology coming out. And Zhuling, I know we've had a lot of internal discussions at RockX about the Shapella upgrade and what it means for us and what it means for our partners and our investors and clients. Can you share a little bit around how we're working on that?
Sure. Yeah. So as a institutional ETH validator provider, especially we have been running over 240,000 ETH sticked with us. So that's definitely we're not taking anything lightly here. And this also means that the past few weeks has been extremely busy for us because we need to make sure that if our customers decide to withdraw, they can successfully and very easily do that. So this means that for every single product we have built and offered, whether this is about ETH direct staking for every 32 ETH, or whether this is about liquid staking for our Bedrock product, or whether this is about us making sure that all the ETH that staked us through, let's say, Lido or through other institutions, because the whole process are different, but at the back end, we can always execute their requests instantly and also at large scale as they wish. So we have done a lot of testing. So we have actually successfully done all those testings on Goerli testnet for all the products. Yep. So we are making sure on day one of Shanghai Shapella upgrade, we are ready for withdrawal. Yeah, so we're not going to delay that. We know that some companies, maybe due to their legacy issues, they need to take more time. But we just want to make sure that from our end, we're ready. And the second thing here is that just to Calvin's point, I think after this, we are introducing a real yield to DeFi. Yeah, and also Shapella upgrade actually is not about just withdrawal. There's also some other ways to reduce gas fees. So we also see that as a very interesting part, how developers can start to use Ethereum even more. And lastly, given that we are the we're the validators, so we work very closely with block builders and also all the MEV traders. Based on what has happened this week, there were some fights between different MEV traders and also attacks. So also we're looking very closely on whether that is fair, and also in the future, how this whole ecosystem and value chain works, so that we make sure that nobody gets unfairly treated, at least from a base layer perspective.
There are definitely a few different avenues that RockX needs to focus on, not just the withdrawal process, but that in itself is quite challenging from a developer perspective, just making sure that everything's up to speed. And as an institution, they would expect nothing less than things to be ready on the day that it's going live, and not wanting that to have to deal with delays and further checks and mishaps. So that is super important.
If I may just add one more point here. We keep on talking about enabling withdrawal, right? It does give people an impression that, oh, there's going to be a lot of withdrawals. And I mean, it may not be actually that case. Yeah, because we do actually encourage our customers, and even ourselves, we're going to withdraw a bit, but that is more to test out the functionality. Yeah, because this is also what we believe will make people at peace. Because let's say if they hold so many validators and they withdraw one, it's successful, they feel much more comfortable. Yeah,
absolutely. Did you want to just mention the two types of withdrawals, the partial withdrawals and the full withdrawals? Are you familiar with the separation? Yeah, do you want to just mention that briefly?
Yeah, so after Shapella upgrade, actually partial withdrawal will happen automatically, I believe, to everyone. So meaning that the rewards will come to you every day. You don't need to do anything. Yeah. So you only need to do to make a request or to initiate a transaction, that is to exit the validator fully, which is to get your 32 ETH back. Yeah, so think about it this way. I think this also has a very good psychological effect that actually you're seeing small revenue that comes to your wallet every day. And if you want to withdraw and get your 32 ETH back, that is also fairly easy and also transparent.
Yeah, I haven't really seen much talk about the partial withdrawals, which, as you say, it's probably a good thing that it's an automatic and regularly updated, because people like to see money coming in. If they're going to invest, they want to see the returns, and what better way to do that than to have it as an automatic thing they don't have to worry about. It's just constantly coming in, and it's very visible and very smooth process. JD, for Cobo, from a custodial perspective, how are you guys managing this upgrade?
So there's a longer term view and a shorter term view, which is a big day. So firstly, for the longer term view, with how we're preparing for the growth of this staking industry. So we're focusing some product development, especially around the multi-sig non-custodial wallets, to cater for companies who do staking. Okay, so that's one thing. And also, of course, we're also working on partnerships with the most innovative staking providers like RockX. Because Cobo, we are positioned as a custody technology company. We're fully focused on providing security and efficiency of token management to our customers. We're happy to leave staking to the experts. Okay, so that's how we're preparing for the growth. And as for preparing for the big day, it's typically like it's just like how we've dealt with the other upgrades in the past. We would be we will align with practices and the timing of major exchanges like Binance. Okay, so we will also be suspending deposits and withdrawals for impacted tokens just before the upgrade, and we will reopen deposits and withdrawals for impacted tokens once we and also Binance and the other big exchanges deem the network to be stable. Okay, and we will of course notify the users then. Of course, there are exceptional situations where some users may insist on withdrawing during that period. On a case-by-case basis, we may approve, but we will tell them you are fully liable if the network goes down, you lose anything. Yeah. So that's how we're preparing for the big day as well as the longer term.
And at the end of the day, people don't really want to be transacting on a network until the upgrade has occurred and been proven to be a successful upgrade. I don't think anybody would really be complaining about a very short delay in that regard. Now, with the Shapella upgrade, there are definitely going to be some opportunities as well as some risks from an institutional perspective. I'd like to open this up to all of you. What are some of those opportunities and risks that people should either take advantage of or consider taking advantage of, or just be aware about, and not necessarily in a way that's going to stop them from engaging with Ethereum, because that's not what this is all about, but rather just to be informed so that they can maximize their opportunities. JD, did you have something to start with?
Yep, sure. So from what we've gotten in touch with, a lot of companies, especially the Web3 native companies that do a lot of staking, they actually have a high preference for multi-sig wallets. For instance, like Gnosis Safe. So multi-sig in general, I'd say it's very safe and secure. But in some situations, you may sacrifice some efficiency with security. For instance, in DeFi and staking, there could be daily menial tasks such as claiming rewards and restaking them. So the key owners for these wallets may be typically your company founders and so on. They may not feel great, excited about taking care of these tasks every day. So they may delegate this to other people in the company. But in doing so with a multi-sig, the only way to delegate is to give these other people or team members a key. So in some sense, this may be higher risk. Okay, so I mean, what we've done with one of our product development to address this is one of our products, Argus, called Argus, which is a DApp that we built on top of Gnosis Safe. So this enables role-based access controls on top of multi-sig wallet while still maintaining full decentralization. So there will be role-based access controls where like you can give a specific wallet address to a team member role where they can perform very specific transactions with specific whitelisted contract addresses. Like one person can only send ETH to a specific staking address, another person can only send USDT to a Uniswap USDT ETH pairing contract address with amount thresholds and so on. So basically what we're trying to do is to allow multi-sig users to access DeFi with decentralization security that they used to, but with efficiency as well. So that's, I think, part of the risk and how we're trying to address that. As for opportunities, I think, I guess one thing is that we can see a gradual shift towards more true market equilibrium, because I think up till now, if you see how much ETH has been staked, it's around 15% right now. And compared to a lot of other chains, it's, I think, maybe probably 50, 60, 70%. So there could be a lot more staking that could be, because of the flexibility to stake and unstake, this could encourage more redistribution or reallocation of ETH to different players in the entire ETH staking ecosystem. So there could be more competition, more innovation, more business models. So I think this is something to look forward to.
Absolutely. I just want to repeat, with Ethereum, there's only about 15% of the circulating supply staked. With most other proof of stake chains, that's 50, 60, 70%. That's a huge discrepancy, and that just testifies to the fact that there is so much potential from both retail and institutional investors to come in to staking, and it just makes perfect sense to me that is going to happen or start to happen as we progress and build out these new features, the withdrawal aspect, and improve the security and the user experience. Zhuling and Kelvin, what are your thoughts on the opportunities and risks?
I don't have much else to add. I think JD already covered everything I want to say. Maybe Julian, you want to chime in?
Yeah, I mean, based on our discussion with a lot of companies, right, whether those are crypto native or non-crypto native companies, I think just by having this idea of a additional yield that does not require trading, that does not require lending out, which has created a lot of issues last year in terms of lend out. So a lot of interesting discussions has happened, right? So there are companies are actually approaching us to think about a passively managed fund that the yield actually comes from staking. Yeah, so there are also other companies that are more on the trading side, they're also looking at, okay, besides their usual strategy, can they also capture that additional 4 to 8% yield from ETH, right? There are also companies that are also looking at, okay, can we also use structured products to hedge the market risk? So it actually becomes a yield product that is denominated in dollar. So all those things are super exciting, and we are just, impressed by the amount of new ideas that comes from different types of companies, right? Some are more buy and hold, some are more trading focused, some are more, focused on financial products. So all of them are actually actively, just because of ETH has enabled a Shapella upgrade, just gets them to think about how to embrace it. So, this is also one of the reasons why I do think this is actually a huge catalyst for institutional adoption. Yeah.
Absolutely, absolutely. And just going further about the staking aspect, we've already started to see some increase in interest in liquid staking, which some people may not have realized that liquid staking is although it's not directly relevant to the withdrawal concept, because liquid staking has its own form of liquidity providing features or functionality. The interest is kind of aligning with this Shapella upgrade. So how do you see the competitive landscape evolving for specifically institutional investors after this upgrade? And so what factors or what aspects will you see as being the most important to developing the success of liquid staking? Kelvin and Zhuling, I'll focus this one on you guys to start with.
Yeah, I guess. We started to see this even with other players add more adjacent technologies to tap into some of the excitement around LSTs. But I think kind of to take a step back, I think it goes back a bit to what Zhuling mentioned about having this access to what is very similar to a risk-free rate within traditional finance. One of the things that back when I did Binance staking, I thought was really powerful was that a lot of people didn't know what POS was maybe 4 years ago, but that maybe trading firms that previously did a lot of delta neutral strategies were forced to care when we gave some staking yield directly to users that had some balance of the POS assets inside their Binance wallet. And so it kind of spurred a lot of education. In this grand scheme of things, even a few percent a year is not that much emissions per se, but it may cause a large percent of the total supply to need to really understand a little bit more of what's going on and why they're earning some kind of interest rate. Because I think a lot of users from the quote unquote real world, they're conditioned to say any yield is not free, or whatever numbers that you're seeing, there must be a trick. And I think that's actually some of the beauty of the psychology of it, that by seeing that there is some sort of yield advertised, it forces users to really spend a lot more time to research, to understand, to try and learn what's kind of driving some of this. I personally love checking ultrasound.money all the time. It's always one of my pin tabs on my computer, because I'm always curious to learn more about the burn, how many users or what gas is break even for ETH to not be in total minting new supply, things like this. And I think you very quickly go down the rabbit hole just because of this one very simple concept of having some yield from a very, very large asset. A few percent may not look like a lot, but when ETH is the second largest asset within our entire sector, it obviously in nominal terms becomes quite important. I usually like to make the analogy that ETH is like the growth of a developing country, but now with this, what is it, 1559 with the burn, as well as now proof of stake, you now have a economy that actually is like performing like a Japan or a Germany or something else that in the real world would usually be thought of as a monetary safe haven with a very low interest rate environment. that's what ETH has been able to achieve thus far, and hopefully this is just one more step in that. And I think that it will be very difficult for a lot of institutions to ignore the value that can be had from any type of financial instrument that has the growth potentials of something like a tech stock or a tech world that we see, of course, in the smart contract worlds of Ethereum. But yet the monetary kind of structuring, like a inverted pyramid of an aging population in a real world country.
Yep, that's a perfect analogy here, Calvin. Yeah, just a couple of points here, right? Maybe first let's look at, okay, why do people need liquid staking at the first place, right? Especially when withdrawal is enabled, right? So if you look at some of the numbers, after withdrawal is enabled, how long does it take for you to withdraw fully to get your 32 ETH back, right? So this is actually variable because every day there's a fixed number of withdrawals that will be entertained. So it's a first come, first serve kind of concept. So you can do your queuing theory calculation here. But just looking at some rough estimations here, we're talking about 1 day to maybe 7 days or max 10 days for withdrawal. Yeah, so given this withdrawal period, so there are people that do want to hedge their risk. Or that period is still illiquid, right? So actually that's the only period that your ETH is illiquid because you can decide to withdraw anytime. So on one hand, there will be people that want it to be more liquid. And number two is that, not everyone can actually afford 32 ETH. So some of them may only have like 1 ETH or 2. They shouldn't be excluded from, enjoying the yield that comes from Ethereum staking. So this is also where liquid staking that comes to play. And the third thing here is that maybe every institution can launch their own liquid staking. Basically, that's kind of like, they issue their own badge to their own customers or their own assets. But that's going to make all the liquidity very fragmented and very hard for collaboration across institutions. So this is where, a neutral and professional provider that offers a liquid staking solution to everyone actually has a lot of merits. Yeah, so so this is how we see it. We actually started, we do believe that institutions will be more willing to embrace liquid staking after the Shapella upgrade.
And RockX is kind of putting its money where its mouth is in Bedrock with the development of putting resources and developing out that institutional focused liquid staking, focusing on that compliance and that regulatory aspect as well. Kelvin, I just wanted to agree with you in that whenever I talk about yield and cryptocurrency staking as an investment product with family and friends who aren't familiar with crypto, their first thought is, well, there's nothing backing it. It must be some sort of pyramid scheme because you're getting this yield and you're not doing any work for it. And so it naturally evolves the conversation into, well, what does a validator do? What's the work that's being done in securing the network and how the whole blockchain network is built from the ground up? And it's just this natural conversation that flows out of it. And it's a really good way of relating a traditional product being an investment that has a yield in with the technical side of blockchain and how that works. So 100% agree with you there. That's probably the most common conversation I have with people when I talk about cryptocurrencies. Now, before we get on to the next question, I just want to reach out to the audience and just remind everybody, do feel free to ask any questions in the chat or the questions box. We will be getting to the questions later on in a few more minutes. We've got a couple more questions to run through with our panelists first, though. And so this next one, JD, is focused on compliance. and it's been in the news quite a lot with the SEC and the CFTC and Binance and the banks, and I won't go into all the different people that have been involved in these conversations, but how can institutional investors ensure that their staking activities in whatever way, shape or form, whether it's liquid staking or staking just as a straight validator, how can they ensure that they're secure and compliant with relevant regulations? And Julian, Kelvin, do feel free to add into whatever JD has to say.
Maybe I'll just start with a high-level analysis of this, and then I'll let Julian and Kelvin go into the details of compliant staking. Okay, so basically in our world, which is crypto is fintech, which is finance and technology. Finance is full of regulation, technology just continues to develop, right? So we as Cobo, we're going on both tracks. We are licensed. We're working on more licenses as well. But we're at the same time we're also working on a lot of technology and trying to go with the tech angle. Tech angle basically like, okay, let's say in the context of custody providers, okay, you need sometimes you need a crypto custody license. So the tech angle works such that, okay, which could be similar to staking, is such that, okay, let's say if you use our MPC wallet, which is co-managed custody, a multi-party computation. So in this context, we are just a tech provider. Because if you use that wallet, you as the customer, you are the only party that can unilaterally move the coins. So we're not the custodian. We don't need a license. You are your own custodian. Okay, but this is the tech angle. The regulators have to come round to understanding a bit more of how technology works first, and then I think regulations may evolve when they start to understand how blockchain technology works is different from TradFi.
Absolutely. Julian, Kelvin, would you like to add to anything there?
Yeah, so I guess maybe the regulators sometimes do need to get a ChatGPT to help, you know, to understand the technology better in some cases. Yeah, I do agree with you. You know, there is some education and also you know, more understanding of how things work in our space to the regulators who are so used to the traditional finance. Yeah, because the staking yield is not something that you can find an analogy from the traditional financial world, right? Because it's not from trading, it's not from lending. In fact, the yield comes from settling all the transactions on the blockchain itself. Yeah, so you know, in this case, it's kind of like you are actually part of the Visa network that settles all the payments, right? Hence, you're getting rewarded for the work that you have done. So that's how we see it. I think when people talk about compliance here, probably a lot of people are gonna refer to what has happened to Kraken, yeah, because they got fined. Actually, they are forced to unstake all the validators, probably in the near future. Mainly because for me, there are a couple of points, right? So number one, in order to be more compliant, especially with the regulators, a self-custody works better in this case. Because in this way, it's actually you having access of all your own assets and together with a validator, and you start to perform the work and gain the revenue. And the second thing here is that maybe, I mean, right now it's very hard to tell regulator or explain to even accountants or non-crypto people, you know, whether do I really have a validator or where is the revenue, right? So that is a part. I think, you know, as an industry as a whole, we do need to build dashboards and tracking tools that we show, okay, there is a validator that you can check on the blockchain itself, and the record is always there. And also, you know, the daily rewards, everything should be recorded correctly. So that is for tracking and taxation purpose, right? I mean, this is also one of the things that we have been building on. It's called a staking dashboard, just to show, you know, your possession and also your daily rewards, etc. Yeah, I mean, the beauty of blockchain is that everything is verifiable as long as it's on chain. So we just need to make sure that, okay, those are also accessible to everyone. Yeah, not just, you know, for techie people. Yeah. And also we're very excited. I wouldn't say excited, but we're very eager to see how also different regulators start to give a bit more guidance on how they look at it. But I think right now a lot of the regulators kind of put the whole crypto space as one, treat it as one, and they're kind of building guidelines that tries to fit everything. I hope that along the way they will start to treat trading, treat lending, and also probably staking in different terms, right? Because those are actually very different sectors. Yeah. Oh, and one more thing, I think also probably insurance is another part that will get regulators a bit more at peace. Yeah, this is also something that we have been working very closely with more traditional insurers, trying to get that one out.
And when you say insurance, you're talking about insurance for your investments as opposed to people offering insurance products on the blockchain. Is that correct?
Correct. Yeah. So we're more talking about in the staking scene, if things could go wrong, and for each of the segment or the process, whether there could be an insurance that covers it.
Yeah, absolutely. Kelvin, was there anything you'd like to add?
I was going to say something, but I think this last point is actually more interesting to add on to. I think the kind of whole class of other derivatives or other products that people will now need, given the rise of more LSDs and other staking participation opportunities, I think it causes a lot of things that have like second order ripple effects. I think, for example, on the insurance side, there's still a lot of products that have been trying, but I don't think many insurance products outside of maybe Nexus Mutual have a lot of TVL so far. So I actually hope that because a lot of the people that will be looking for the yield in staking products will be, generally speaking, risk averse. They will actually have maybe different risk profiles from maybe some of the degens that we see within crypto, or maybe some of the degens are so degen that they're playing 100x leverage, kind of recursive borrows and lends of being long a stake derivative and being short the underlying ETH, right? That they will need to demand some more types of protections given their strategies that involve liquid staking and other kind of primitives for DeFi. And I'm really excited to see that hopefully cause us to see a lot more different types of structured products, options, whatever it might be. That I think for a lot of folks in DeFi, they've never really approached things like this before because there wasn't simply the scale or magnitude to need all of these types of infrastructures. This is why we fundamentally believe that things like the simple XYK constant product market maker could have lasted for so long within the DEX side, that there simply wasn't that need to be as accurate about everything in C5 versus DeFi. But now I think as we see a lot more of these types of infrastructures being put in place, this is where I think we're finally at the time where we do need now the pricing, the toolings to kind of match TradFi versus DeFi, that every tooling should be at the fingertips of the institutions if we want the institutions to be able to enter this space. So I think it's quite exciting to see that. I think Zhuling said exactly what I wanted to say about trying to give users a peace of mind and feeling that this might long-term even be a better way of explaining what is not a security, because the lower barriers actually participating as a validator into these networks does decentralize the networks themselves, as well as Zhuling eloquently put, they're actually doing work. It's not purely a price speculation element to it. And I think the more we build in kind of defense around that, I think this also gives a lot of kind of, while it's maybe new and will take time for regulation to kind of catch up to new things, it will at least make a clear differentiation between this and other speculative actions that can happen within crypto today. So to us, I think that's a really exciting piece for what we want to be able to be a part of.
Absolutely. I mean, just just listening to you guys talk is getting me even more excited about what's going to be happening in the next 6 and 12 months. I know we've seen a lot of focus on the user interface and the tools for institutions and user experience, and all of those are really going to bring this towards the mainstream adoption and make it easier to understand, not only for those that are wanting to use it, but also those that are wanting to protect the users' interests and the regulators and the lawmakers as well, because at the end of the day, we've already seen if they don't understand what the product is, it's not going to help anybody at all. I'll move on to the final questions before we go to the Q&A, because we are running out of time. And JD, this one is kind of focused around you and your expertise here with institutional grade custody. So that's something that's quite important for some institutions that are wanting to enter the space. The recent shift towards security and in investor protection, how has that come out, and how does institutional grade custody play into that?
Basically, we react to the major industry events and we innovate. We try to solve problems to bring back the trust and confidence. Like with this big industry event of the Shapella upgrade, we introduce role-based access while still maintaining full decentralization to multi-sig. So you combine security and efficiency for staking, and also rewinding just a little bit back, like when we had FTX. So after FTX, we introduced our off-exchange settlement product called Superloop, where you don't need to pre-fund exchanges to trade on them, because people and institutions were losing trust when they had to transfer tokens to exchanges to trade. So this enables you to only settle after the trade, just like TradFi. And the last thing that we're working on is also what you mentioned, institutional grade custody. We think that this institutional grade custody should not only be accessible to the bigger institutions. So we are aware of the custody needs of startups as well. Startups do change and evolve our industry just like the big companies. And so we also have a product range like Cobo, Argus, and a lot of other parts of our product suite to also address the startup community to provide institutional grade solutions for them.
Excellent. Yeah, that is important. Zhuling, Kelvin, was there, I know we're running out of time, but did you have anything that you briefly wanted to add to that?
Yeah, real quick one here. I mean, in this call, we keep on talking about institutions, right? So it may sound like, hey, those guys don't care about, all of us, they just care about working with the large companies. No, in fact, that is not the case, right? In fact, this is where we're trying to get another type of companies or another type of people into this space. And also they could work as intermediary to serve, retail users. This is due to regulation, and also this is also due to, for the convenience of for retail users, and also for their protection. I think this is also what Junde was referring to. Actually, all of us are building products that is, it's not just B2B. This could be also B2B2C. Yeah, and we're definitely looking at addressing a much larger market.
Absolutely, and for a lot of these products that are designed for B2B, B2B has a much higher stringent due diligence, and so as a retail investor, you can get a bit of confidence that if it is designed for B2B, that it's designed to a very, very high standard, generally speaking, and it is going to be put through its stress tests very, very well. Moving on now we've got a number of community questions that our viewers have asked. I don't know if we're going to get through them all because we've only got a couple of minutes left, but very, very quickly, I think I know the answer to this one. Do you guys think that the staking ratio of ETH that's staked versus ETH that's unstaked is going to increase after Shapella? Yep. It's going to increase? Yes, absolutely. I would be very surprised if it doesn't. Now, going on to MEV, I'm not sure, maybe Zhuling and Kelvin, maybe you guys want to give a very brief answer to this. Do you think that the Shapella upgrade will have an impact on MEV?
Okay, just my 2 cents here. Yes, yeah, from 2 angles. Number one is that the MEV revenue distribution might be changed, right? Given that more participants that comes into the scene. And second, so, this is more of a commercial kind of decision between the ETH holders and also the MEV guys. Yeah, so that could be interesting. And secondly, I think there is more of a security aspect, because right now validators can exit, they can come in. So how to making sure that at least the majority of validators are behaving honestly or behaving in a fair way. This also impacts MEV a lot, or MEV can also reversely impact the behavior. Yeah, I do believe fundamentally the Ethereum staking mechanism is built to incentivize honest behavior, and also there are professional staking companies like us and other guys out there. Yeah, but there could be some interesting development that we'll see.
Absolutely. Kelvin, did you have anything to add?
Yeah, I'm actually really curious what would be the impacts actually on L2s and not L1s. Because fundamentally, the easier we make it for users to stake on L1, the bigger the missed opportunity cost it is if you hold real ETH as the gas that you're paying for transactions on L2s. And so I am actually really interested because generally speaking, because L2s have had lower gas fees, there's been, even with lower liquidity, perhaps an equal amount of possible arbitrage opportunities available out there on L2s, just because of quote unquote less dead weight loss given to the miners or network miners back then in POW and now today in the staking world, right? And so I'm really curious to see how these L2s, if hopefully we have different LSDs that exist on these L2s as well. But I do feel that it causes also some kind of shift in behavior, where a lot of regular users, normally they may be incentivized to do a lot of their daily transactions on a cheaper L2, but now they're not incentivized to keep all of their funds in an L2 when it could be very easy for them to earn some nice yield on an L1. And I think that this type of slow separation between what is treated as more like cold storage or kind of savings versus checkings, I guess, in a regular banking sense, I do think that this will actually push the ball more to make users think a little bit more about that distinction and not just leave everything in a MetaMask or leave everything into the same unstaked balance.
Very interesting. I haven't really seen much conversation around the impact of this whole upgrade on the L2s, and I'm not sure how the impact will play out, but it's something that I'm sure we'll see, and it'll be very interesting to see it. Now, we do have more questions, however, we have run out of time. I would like to ask the community if there are questions that have been unanswered, do feel free to tweet at RockX, and we'll aim to get them answered via Twitter as well. I want to give a very big thank you to Kelvin, Junde, and Zhuling for taking the time out of your very busy schedules to join us and share some of your wisdom and insights about the Shapella upgrade. If anyone would like to connect with these guys or RockX, Impossible Finance, or Cobo any further, please do scan the QR code, and you'll be able to reach out to them and contact their teams. To finish up, I would like to just offer a very, very quick 1 minute's conclusion for each of our panelists. If there's one thing that you guys would like to leave the audience with, what would that be? Kelvin, we'll start with you, and Zhuling, and then finish up with JD.
Always use market opportunities as a chance to learn something new. I think that's kind of what I hinted at earlier about seeing that a lot of people will learn about what is proof of stake, what are validators, and so on and so forth, just because they see APY now next to whatever asset they may be holding. And I think that whether it's this upgrade or other future things, I do just hope that people kind of stir the same conversation or give the same attention to other new learning opportunities as well.
Yeah, so a lot of people are looking for alpha in this space, right? Or they're used to work on the alpha. So encourage you guys to look at staking. That is actually the beta for this market. And potentially this could also add some alpha features, which is on the liquid staking side.
My one word to leave would be diversification. Because over the past year, we've seen banks, custodians, exchanges, stable coins all run into all sorts of issues. And many of these companies are regulated and everyone claims they're secure until the moment they're not. So no company we've seen is too big or too regulated to fail. So I think diversification as a risk management strategy, diversifying across different staking providers, bank accounts, stable coins, custodians, this could be a very meaningful risk management strategy moving forward.
Great, thank you. I think everybody who's listening would be quite wise and will be able to move forward in their investment opportunities if they just take on these three lessons you guys have shared with us. Now, again, thank you very much to our panelists for joining. I would like to close off this session by thanking RockX for sponsoring this webinar and a little bit of exciting alpha, as you could say, Zhuling. Bedrock, which is a new liquid staking protocol that has just very recently launched last month in March by RockX. It's focused on institutional compliance, so KYC, KYB, but it also has elements that allow for retail investors to stake while providing that liquidity, even as little as, say, 0.1 ETH. It's definitely worth looking at and having a play around with. It's definitely getting the attention of numerous organizations and individuals in the space. And very finally, we're always looking to grow, and this is the first webinar of hopefully numerous that we'll be running. We would love your feedback. So please, if you have time, take a couple of moments now to just scan this final QR code on the next screen, which will take you to a feedback form, and let us know what you enjoyed about this, what you think we could improve, and what you'd like to see in some of the next webinars that are run. Thank you very much. Thank you, Zhuling, Calvin, and Junde for joining us, and all the participants and listeners. And we'll hope to see you next time.